Good morning, grade 12s. Today we are going to continue with the inventory valuation. We are still busy with the periodic inventory systems. Last week we looked at FIFO. Today we are going to look at the weighted average method. Okay, so the weighted average method is used when there's lots of stock that is bought in small quantities. For example, in a grocery store, there's a large variety of different items that is bought. And there's small quantities that's being bought, a little bit of this, a little bit of that, and altogether, obviously, it makes up your stock. So the average price then gives a good composite picture of the cost of the goods. So we are basically going to average out the prices of all of these goods that we have bought. At the end of the year, when the closing stock value is determined, then the average price will be used to calculate the value of the closing stock. We're not going to, for example, be looking at what the price is of each specific item. Okay, we are just going to see how much stock we have left, and then we are going to use the average price of those items to calculate the value of the stock that we still have on hand at the end of the year. The average cost of the product is then calculated by taking the cost of the units and dividing that by the total number of units that we have on hand. So if we look at the first example, you are provided with information relating to Hot Wheels Pty Ltd for the 3 months ending 30 September 2020. The business trades in motorbikes and helmets. Mike, the owner, wants to assess his stock records before any price increases during the year. So the information that you are given is the stock balances according to the physical count that he did at the end of these 3 months. On the 1st of July 2020, he had 30 units in stock on hand, and the cost price of those units was 500 Rand. So 3 times 500 gives you 15,000 Rand. On the 30th of September, he would have 12 units on hand, okay, and this we need to calculate. Okay, that is the amount that we then need to calculate. Okay, so basically your July balance, okay, because this is for 3 months ending, this is going to be your opening balance of the 3 months, yeah, the opening for the 3 months, and then your closing balance is going to be the one at the end of the 3 month period. Then we also have information on the purchases. On the 20th of July, 25 units was purchased at a cost of 510 per unit. Okay, so obviously 25 times by the 510 is going to give you the total 12,750, the total value of the stock that we had purchased. On the 20th of August, okay, we bought 30 more, and the cost price per unit in this case was 525. There'd been a price increase. So again, if you take this 30 units that we purchased multiplied by the cost per unit, the value of the stock that we had bought is 15,750. The last purchases in September, we bought 20 additional units at a cost of 540 per unit. So 20 times by this 540 is going to give me this 10,800. That is the total value of the stock that I purchased. So for the 3 month period, we have purchased basically in total 75 units, and we just add up these amounts to get the total value of the stock purchases. Then they also tell us that 5 defective helmets was returned to the suppliers, and this is from the purchases in August. All right, so this is important information. We need to know that it is from August, because we need to know what the cost price per unit was of these returns that we have sent back to the suppliers. Then we also told that 85 helmets were sold during this 3 month period, and they were sold at 600 Rand each. So the first thing that we are required to do is to calculate the value of the closing stock. Okay, this is how it is going to work. Okay, we're going to take the opening stock plus the purchases minus the returns over the opening stock plus purchases minus returns. Okay, basically we are going to put on the top, we have the rands. Okay, so opening stock in Rand plus the purchases in Rand minus the returns in Rand. And we divide that by the amount of units. So how many units did we have on hand at the beginning of the year? How many additional units was purchased and how many units was returned? All right, and if we do that, your opening stock in rand value was 15,000 rand at the beginning of the year. Our total purchases was 39,300. Our returns was 2,625. Remember, that is the 5 helmets that we have returned from the August stock. The unit price of those was 525 each. So 525 times 5 is going to give me the 2,615, which is the rand value of my returns. We divide that by the 30, which was the unit in stock at the beginning of the year, plus the 75 additional units that we purchased during the 3-month period, minus the 5 helmets that was returned. Okay, that is going to give us an average price per unit of 516.75. Okay, it's rand amounts. So if it's a rand amount, we always round off to 2 decimal places. Okay, so what is the value of our closing stock then? Okay, so first we need to calculate what price per unit we are going to value our closing stock at, and that is what we've done there. Okay, the value of the average price of our closing stock was 516.75. But we were told that there was 12 units on hand at the end of this 3-month period. So 12 times by this average price means that the value of our closing stock is 6,201. Okay, then they say that Mike suspects that helmets are being stolen from the shop despite security cameras being installed, and we have to provide a calculation to verify his suspicion. This is going to be pretty much exactly the same way that we did it also for FIFO. We are going to start with the opening stock that we were given at the beginning of this 3-month period, which was 30 units. Okay, remember when we are calculating the amount of units that is missing, we don't use the rand amounts, we use unit amounts. Okay, always the units. Okay, then we're going to add the purchases. We know that for this 3-month period, we have purchased 75 units. We're going to minus the returns. Okay, 5 helmets was returned. Then we're going to subtract also the closing stock. We have 12 units left at the end of the 3-month period. Minus the stuff that was sold. We know that we have sold 85 helmets during this 3-month period. And that means that there's 3 units that is missing, 3 helmets that is missing, that is unaccounted for. Okay, that was obviously stolen. So what can Mike do to improve the internal control of his stock? Okay, they tell us to give 3 points. First of all, he can do regular physical stock counts. Okay, and obviously in this case now he checked his stock after 3 months, so he can do more regular stock counts. He can place tracking devices or security tags on the helmet, okay, like those that we find in clothing stores, where they have to remove it when you pay for the item. They use their little gadget to remove it, so that if the stuff gets stolen and it goes through the security doors at the entrance of the shop, then that security thing makes a noise. Okay, so security tags on it so that we can see when it is leaving the shop without having been paid for. Then he can provide security display cabinets for his stock. Okay, so in other words, he can put the helmets in locked up cupboards with glass windows so that the people can still see the stock, but the cupboards have to be unlocked by a staff member before people are allowed to actually handle them. He can improve security at the gates, so you can literally put a security guard at the gate like they do at some shops, where when you leave the shop they ask you for your sales slip, your till slip, and he checks the items that you are walking out there with against the slip to make sure that everything was paid for. Then also if your staff is suspected, okay, you can make use of division of duties, okay, so that the people that can be accountable. Okay, each person has a specific job to do, and we can pick up from that kind of who is suspected of stealing the items. Then you can also buy smaller quantities more regularly. In other words, remove the temptation. The more stock there is in the store, obviously the more difficult it is to pick up that some of it is missing. So if he buys smaller quantities on a more regular basis, you will see that this guy only purchases once a month. So instead of making one large purchase once a month, on the 20th, he can buy more regularly. He can buy every week. Okay, he can go and buy quantities every week, but then buy in smaller quantities, so then it's easier to pick up if stuff goes missing. Okay, if we just look at another example, this is a bit more complicated than the previous one. The following information was extracted from the records of Roo Traders for the financial year ended 28th of February 2021. The business uses the weighted average method and the periodic inventory system to value the stock of school bags. In an exam question, they're always going to specify which method is being used so that you know which the method is that you have to apply in your answers. Okay, so what information are we given now? On the 1st of March 2020, this would be the opening stock, the stock on hand at the beginning of our financial year. There was 150 units in stock, and the value of that stock was 11,280. At the end of the financial year, on the 28th of February, we are told that there's 635 items that is in stock, stock on hand. This was obviously determined through a physical count. Then they give us information on the purchases. Okay, in this case now I want you to notice they give us the units that was purchased, the unit price, so what we paid per unit, then the amount before carriage. Okay, now in the previous example we did not put in the carriage amount, it was more simple. Then they give us what is the carriage per unit and then the total amount. Okay, so in May 2020 we purchased 800 units at a price of 82. Now the amount before carriage is this 800 multiplied by the 82 Rand that we paid per unit, and that is going to give us the amount before carriage. But we also have to pay the carriage. Okay, according to this periodic inventory system, the carriage is added to the unit price to calculate the total value of the stock. So basically what we are going to do is we are going to take the 800 items that we purchased and we multiply not by 82, we multiply by 82 plus the 3 Rand that is the carriage. So 800 times the 85 Rand in total, that is where this 68,000 Rand is going to come from. The total amount includes the carriage. Same thing for August. Okay, in August we purchased 900 items at a price of 83 Rand per unit. So again, if we take this 900 Rand times the 83, we are going to get the amount before carriage. But there was carriage of 3 Rand per unit. So again, if we take this 83 and we add the carriage amount, the 3 Rand for carriage, then the total unit price is actually 86. And the 900 times by the 86 is where the 77,400 is going to come from. Then in January 2021, we purchased 1,000 more units at a cost of 90 per unit. So this 1,000 times by the 90 is going to give you the amount before carriage, which is 90,000. But now the carriage is also increased to 4 Rand. So we have to add the 4, okay, because it's part of the cost of these goods. So 1,000 Rand times 94 is going to be the total amount which includes the carriage, which means the value of your stock now is 94,000. Then they tell us also that 40 school bags bought in May, okay, 40 school bags that was bought in May were donated to needy learners at a local school. Okay, this is important. You'll see how this is going to affect our calculation just now. Then during the year, 2,180 bags were sold and the selling price is 130 Rand each. And 15 of these bags were returned by debtors. Okay, how we're going to deal with this, you will see when we do the calculation. Okay, so the first thing that we are required to do is to calculate the value of our closing stock. Again, the formula is exactly the same. It's just a bit more complicated now because there was carriage. All right, so we're going to take your opening stock. Remember, rands over units. Okay, always the rands, opening stock in Rand, plus your purchases in Rand, minus the returns in Rand, plus then the carriage in Rand and the customs duties in Rand. Now in this example, we didn't have customs duties, but just remember, should they give you the customs duties, both carriage on purchases and your customs duties must be added. Okay, we're going to divide that by the opening stock in units, okay, the number of units that we had in stock at the beginning of the year, plus the additional purchases that we'd made during the year, and then minus the returns. Okay, so if you look at our example now, the opening stock rand amount was 11,280. The total purchases that was made during the year is 239 rand 400. Okay, and then we minus, basically, remember this amount includes the carriage. Okay, it is the total amount. It's not the amount before carriage, it's the total amount. It includes the carriage on purchases. This 3,400 is not returns in this case, but these are the donations that we'd made. Okay, we weren't given any returns, but we were told that a donation was made. Okay, so instead of doing the returns, you're going to make provision here for the donations. It has to be subtracted because we don't have it anymore. It's gone. Okay, and then over units, obviously the 150 is the amount that we had in stock at the beginning of the year. Okay, then we're going to add the total purchases. So how many units did we buy during the course of the year? That was 2,700. And then we minus, these are the donations in this case, not returns. All right. So now very important that you must remember is the donations are deducted at the actual cost. Okay, the cost of the donations, it was 82 rand, that the value of the stock that we have donated. Then we have to add the carriage. All right, this 3 rand is the carriage on purchases. So the total amount, the total value of those things per unit is actually 85. So 40 times by the 40 bags that was donated times by the 85 rand. This is where this 3,400 comes from. We can't multiply by 82 because we paid the carriage as well. So the total cost of these items, we have to multiply by 85. Okay, if we do that, it's going to give you 247,280 over the units of 2,810. And that means that our average price is going to be 88 rand per unit. Okay, we first have to calculate the average price, then we have to calculate what is the value of my closing stock. Okay, so the value of the closing stock is the average price. Okay, so whatever we have calculated there, whatever I said my closing stock, my average price was, times by the amount of units that I have in stock at the end of the year on hand, and that is going to give me 55,880. Okay, that is the total value of the stock if we use the weighted average method at the end of the year. Okay, now very important. When items are returned, remember we said there's X amount of units that was returned by our debtors. We do not make provision for that in this calculation because it is now included in the stock. Okay, they've returned it, so it is part of this closing stock. All right, this 635 rand, the stock that was returned is included in these units. They've now returned it, so when we did the physical count, we'd already gotten it back. It is included in our stock already. Okay, but when we return items to suppliers, also very important, there wasn't in this case, but if we did return items to the suppliers, our carriage is not subtracted. Okay, so then the returns will be valued at the unit price of the stock that we've purchased. We will not subtract also the carriage because the delivery costs are charged by a different service provider. Okay, for example, we would be purchasing from ABC stores, but it would be Take-A-Lot that is doing the delivery. So we would be paying, like, for example, the 82 rand to ABC stores, but the 3 rand was paid to Take-A-Lot, the delivery people. Okay, so you can't, when we return items to the suppliers, we will subtract at the unit cost of the purchases that we made from the supplier. The carriage we cannot subtract. That is a cost. Even if we return it, it is a cost that we still have to pay because we paid that to a different service provider. And if the stock is defective, it has to do with the supplier, but the delivery people, it's got nothing to do with them. It's not their fault that the stock was obsolete or the stock was damaged in any way. All right, so we will still have to pay that. Okay, so for today now, you're going to do for me activity 10.12. This is a practice activity on page 379 in your textbook, and we will obviously mark this when we are back at school. You have now done one example for FIFO. You're doing this example of the weighted average, and then we are going to put them together.